Summer looks okay so far, but storm clouds on the horizon, a possible crash brewing, and it might actually even be worse than 2008. We've got the man who actually called the 2008 crash, and he's the author of The Real Crash, America's Coming Bankruptcies, Peter Schiff, here to tell us how this looks. Peter, in 2008, we had stocks collapse 60%. We saw banks going out of business. We saw unemployment spike. It was pretty ugly. You think this is going to be worse? How's it going to be worse? What's this look like?
Well, it's going to be a lot worse, specifically because of what the government did to artificially stimulate the economy in the aftermath of the 2008 financial crisis. Because the government came to the rescue by printing a lot of money, bailing out the banks, propping up the housing market, racking up trillions of dollars of additional debt so we can consume more stuff that we couldn't afford and pay for it with borrowed and printed money. All we did is delay the day of reckoning. But in so doing, we exacerbated all of the problems that make that day of reckoning necessary. And so, yes, the next crash that's coming, and whether it's 2013 or 14 or a little bit later, is hard to say for sure. Knowing exactly when something's going to happen is harder than knowing that it will happen. But we've got a much bigger collapse coming, and not just of the markets, but of the economy. Something that it's like what you're seeing in Europe right now, only worse.
And, okay, so what's that look like? I mean, the pain is coming. We know the policies that are going to get there. What should people be expecting beyond this generalized horrible economy? Are there specifics you have for me? Housing values going down again? The stock market crashing?
Yeah, well, I'd say if you want to try to look at a most likely time frame, and of course it's always hard to anticipate future variables that are beyond your control, but I would say the U.S. economy continues to weaken towards the end of the year, and the Fed ultimately comes through with QE3. It doesn't work in the sense that it's not going to strengthen the economy, but it will weaken the dollar. As the dollar weakens, it's going to put upward pressure on import prices, raw material prices. That's going to cause margins to be compressed in the U.S. Businesses will respond by reducing capacity, laying off workers, and raising prices. So you're going to see increasing unemployment and inflation. That's also going to put more pressure on the budget deficit that's going to widen, both because their government's collecting less in revenue, spending more, and ultimately interest rates are going to start to rise. That's going to cost the government more money to finance the debt that we already have. And as the economy weakens further, we're going to get more QE, which means more pressure on the dollar to go down, and the cycle continues until eventually we have a all-on or full currency sovereign debt crisis, where you see the dollar plunging, consumer prices really moving higher, interest rates spiking, and that's when it really gets interesting, because that's when we hit our real fiscal cliff, when either we're going to have to slash government spending massively across the board, restructure our debts, including not paying 100 cents on the dollar for U.S. Treasuries, be honest with people who are on entitlements like Social Security, Medicare. They're not going to get the benefits they've been promised. Government workers are going to have to take pay cuts. Many of them are going to have to get different jobs in the private sector. Banks are going to fail. People are going to lose money. Not only investors, but depositors are going to lose money as well. The housing market is going to fall again. We're going to have to allow Fannie and Freddie to go bankrupt next time, as well as the FHA, and not bail them out. Alternatively, we can bail everybody out, pretend that we can print our way out of the crisis, and instead we have runaway inflation or hyperinflation, which is going to be far worse than the collapse that we would have if we did the right thing and just let it all implode.
When things start to hit the fan here, where should people be hiding to protect themselves?
Well, the worst place to be is U.S. Treasuries or any dollar-denominated debt instrument. And the longer the maturity, the more you're going to lose. So 30-year bonds are going to be worse than 10 years, and 10 years will be worse than 2 years. But then again, anything in dollars, even if you've got dollars stuffed in your mattress, you're going to lose, because they're not going to buy you what you expect. So you have to recognize that the biggest casualty is going to be the U.S. dollar and any debt instruments denominated in dollars. So you're going to lose a lot less in the stock market. It won't even be close than what people will lose in the bond market. But stocks are not all the same. Some stocks might go bankrupt. So you've got to be careful on the type of stocks that you own.
So what type do I want to know?
In the U.S., if you're going to invest in the U.S., I prefer internationally, but own the companies that are exporting, that have their customers abroad, that have a global footprint, and that might benefit from a much weaker dollar relative to stronger currencies abroad as overseas economies outperform, particularly in the emerging markets. But I think gold and silver right now, you should be, if you don't own gold and silver, you really got to buy. This might be the final dip. Who knows? I think the gold equities, the mining stocks, you've got tremendous opportunities there. You've got valuations that we haven't seen probably during the entirety of this bull market, which has been going on for 10 years. And despite that, mainstream investors still haven't even taken positions yet. Gold and gold stocks have been climbing this wall of worry for a long time. And I think we have a ways to go even before we start to get the manic phase of the bull market.
Well, the timing is tough to get nailed, but the storm is coming, folks. It's time to brace yourselves and prepare, perhaps by drifting into some multinationals and or a little precious metals. He's Peter Schiff, the author of The Real Crash, The Coming Bankruptcy of America.